When somebody asks you why this is going on, what's your answer? What's the why of lower bond prices?
I tell them to separate it into two stories, a global bond rout and what's happening in Europe. The global bond rout speaks to what you've been talking about, Tom, a policy normalisation, a reflation trade. The European bond rout speaks to an overextension, some crowded trade. You saw that big fear, deflation fear trade in Q1, the capitulations of the remaining bond bears and yields that were within 0.05% on a German 10-year just 7 weeks ago, and a huge rebound. And the reason I separate the two is because the global bond market story is one story. Europe is another. That back up to 0.9%.
Right.
The question I would ask, Tom, is how long will the ECB tolerate that one for?
Well, let's look at that chart right now, Brendan. I want to note that we're going to talk a lot of confusion here of yield and price. These are price charts which you use when you start to move, and that's ugly. We've lost 8.4 years of German coupon in 6 weeks. We've lost 8-some% of price, and the yield's only 1%. We've lost 8.4 years of clipping your coupon. Brendan, clipping your coupon is scissors.
Yes.
And your mother had the bond.
Yes, I'm aware that things happened on paper.
Things happened on paper once upon a time.
I too owned a typewriter. Here, John, I want to talk about this. The FT this morning actually very cleverly has Mario Draghi pointing Bund yields up with his finger. How much of what does the financial Ferro say? Is a lot of this what happened yesterday due to comments directly from Draghi saying, "Get used to some volatility; it's in your future"?
Well, get used to volatility is very different to saying get used to a 100 basis point back up in yields. And I really think you've got to separate the two. Vol is one thing. You can have swings in prices, but a back up of 100 basis points very different. Everybody talking about Draghi's comments on volatility. He also had a comment about further monetary policy accommodation, that if anything, they would add to accommodation. I think that's the story down the road. To be honest with you, I understand Mario Draghi's position. Does he really want to fight the bond market every time volatility picks up? Volatility, one thing. A big back up in yields, that's the big story.
John, I find it instructive and encouraging that not yet this morning have you said the word Greece.
I'm trying not to, Brendan, because as far as the bond market's concerned, I really, at this point, in the midst of a global bond market sell-off, I don't think it matters.
Yeah, but the headline for our American viewers waking up this morning is finally equities, futures negative 13, Vonnie Quinn, catch up with where currency and bonds are. Juncker had a good headline out today. Here's the euro 2 days in a row. Here's Draghi moving the euro stronger. And the headline, Vonnie, is we've got a whole other leg up in the euro. Can you do Aer Lingus this weekend?
I don't know. But the euro is trading at 113.49 right now, Tom. So the question is this sustainable? And don't forget, apart from the IMF payment, which may or may not be missed tomorrow, we also have non-farm payrolls. That's
we got the jobs,
this global trade as well. So
the jobs report overlaying as well. John Ferro, thank you so much.